One man, a single laptop, and a trade so powerful it rattled the foundations of modern finance. In a world ruled by trillion-dollar institutions and supercomputers, could one bedroom trader truly erase $1 trillion of wealth in minutes? It sounds like fiction, but it happened. This is the true story of how an unknown man sitting in a small London home brought Wall Street to its knees and exposed just how fragile the global economy really is. To understand how it began, we return to the early 2010s. The 2008 crash had faded from memory. Markets were rising again, fueled by optimism and record low interest rates. Online trading platforms had opened Wall Street's gates to anyone with Wi-Fi and a dream. And inside one modest house near Heathrow Airport lived Navinder Singh Sarao, Nav, as his friends called him. Nav wasn't rich, famous, or connected. He was quiet, withdrawn, even socially awkward, but he saw something in the market that few others could. While big banks relied on teams of quants and proprietary algorithms, Nav spent endless nights studying the flow of orders, watching how prices flickered and moved. He began to sense rhythm where others saw chaos. Nav learned that behind every price lay a vast invisible battlefield called the order book, a record of buyers and sellers competing in milliseconds. If he could read that battlefield faster than anyone else, he could profit, and he did. Armed with nothing but skill, instinct, and a few computer screens, he started to make real money. But Nav wanted more control. He hired a programmer to build him custom trading software, code that could place and cancel orders at lightning speed. Through endless experimentation, he discovered a technique called spoofing, placing large fake orders that created the illusion of pressure on the market. When others reacted, he'd slip in the opposite trade and cash in on their panic. Seconds later, the fake orders vanished. He didn't invent spoofing, but he perfected it. Nav could nudge markets worth trillions with a few keystrokes. And from his bedroom, he quietly made millions. Then came May 6, 2010. At 2:32 p.m., the US stock market suddenly went haywire. Within minutes, the Dow Jones plunged nearly 1,000 points, erasing $1 trillion in market value. Blue-chip stocks crashed to a single cent before rebounding. Seconds later, it became known as the flash crash, the fastest, most chaotic collapse in modern financial history. Around the world, traders froze, algorithms malfunctioned, markets trembled. And somewhere in West London, Nav Sarao kept trading, unaware he was at the center of it all. He hadn't set out to destroy anything. He was running the same strategies that had worked countless times before. But this time, his fake orders collided with the hyperspeed systems of automated funds. His spoofing amplified their reactions, creating a feedback loop that sent prices into freefall. In just half an hour, global markets lost $1 trillion. For years, no one understood exactly what had happened. Regulators blamed rogue algorithms, software glitches, or panic selling. But deep in the trading data, investigators began to notice a strange pattern. Thousands of massive orders placed from a single account in London almost instantly cancelled. 5 years later, in 2015, they found their suspect. Navinder Singh Sarao was arrested at his parents' modest home. The world's media swarmed the story. The man who caused the flash crash. A solitary trader accused of shaking the entire global economy. In court, Nav appeared bewildered. He wasn't a villain, he was a math savant who discovered the market's weak spot, and he claimed he never meant to cause harm. He simply exploited patterns everyone else ignored, and in a sense he was right. He hadn't built the fragile system that collapsed. He just revealed how fragile it was, because by 2010, markets were no longer human, they were machines. Fast, automated, and dangerously interconnected. When Nav's spoofing met those machines, the illusion of control shattered. Nav eventually pleaded guilty to market manipulation but avoided prison thanks to his cooperation and his mental health struggles. He walked free, penniless but famous as the man who exposed the system's weakness. His story became a mirror for the financial world. If one person on a laptop could spark $1 trillion meltdown, what did that say about the architecture of modern capitalism? And history repeated. In 2021, millions of small investors banded together online to squeeze hedge funds during the GameStop saga, another moment when the crowd, not the institutions, controlled the market. Crypto traders watched flash crashes erase billions in seconds, driven by automated bots. Different tools, same fragility. Nav's lesson endures. Technology doesn't remove risk, it accelerates it. Power is shifting from the few to the many, but that power remains volatile, and the more complex our financial networks grow, the more catastrophic a single point of failure can become. The flash crash was a warning, a glimpse of what happens when algorithms, greed, and human ingenuity collide. It showed that the market is not an untouchable monolith. It's a living, unstable system where even a bedroom trader can tilt the balance of global wealth. 3 truths remain. First, speed without oversight breeds chaos. Second, decentralization gives power, but not always wisdom. And third, transparency is the only safeguard left in a world run by code. Navinder Sarao didn't break the market. He held up a mirror to it. And what we saw reflected back was unsettling, a trillion-dollar illusion resting on fragile code and blind trust. If one man with a laptop can expose that illusion, what happens when thousands do? The next financial shock might not come from Wall Street or the city of London, it might come from a bedroom just like his. This is the story of the bedroom trader who wiped out $1 trillion and the system that allowed him to, because in the digital age of money, power isn't measured in skyscrapers anymore, it's measured in milliseconds.